Welcome to Volatility 411 for Equity Armor Investments. I am Joe Tigay coming to you on another VIX expiration day. The VIX expired for July 25.45. That's on the low end of the range that we've seen so far the last 6 months, give or take. Obviously, 25.45 is a very elevated expiration. It's higher than the VIX was all of 2019. However, the VIX being mean reverting, maybe the short-term mean is higher. The past 2 days the market's been higher. The VIX has also been higher. That's something I'm concerned about watching as we head into August, usually a slow volatility month. However, people are not quite comfortable up at these levels. The SPX has had a tremendous run, and the VIX still is very elevated, as we've discussed. So we'll be watching all that. Now, there's lots of things to be concerned about. Top of the list is still COVID. Cases are rising, deaths are rising. Schools are expected to be opening up in September. If that doesn't happen, what will the stock market do? Now, also out there, we have geopolitical concerns popping up now. Consulate in Houston, the Chinese consulate, closed down unexpectedly. They say they're going to retaliate. Will there be retaliation? The retaliation, that's anybody's guess, but of course that usually causes a little bit of increase in volatility and uncertainty. And we all know the election is still coming around the corner too. That always is volatility, and in this environment, I don't think this year will be any different than the rest. So what does that all mean for the VIX? Under the surface, the skew is extremely high. People are paying more for puts than they are for calls than they normally would. Yesterday was 134. That was a little bit lower than lately, but I've seen a lot of prints. Daily closes above 140, which is telling me that it's an elevated area. Now, it got high right in February, right before the market started to sell off. So that is one of the possible outcomes for the high skew. Another possible could just be that people aren't necessarily buying puts, but they're definitely selling calls. And maybe that's why the VIX is being suppressed, and they're selling calls because they don't expect the market to go any higher. Either way, I think that's a bearish tilt to the market. I think we should all pay attention to that. Now, the VVIX, the other thing I always look at, that's a very low too, but it's still elevated at 115. Interesting to watch all that. For Equity Armor Investments, I'm Joe T.